MACD indicator, one of the best trading indicators that you can use, and definitely one of the most popular indicators. I'm pretty sure that even if you're not into technical analysis, you have heard somebody mention the MACD before, okay? Now, MACD stands for moving average convergence divergence. And so the first thing I want to do here is show you guys where you find this indicator and how you add it to your chart. So remember, I'm going to be using Tradingview here for today's video, completely free to use. So go on over to Tradingview if you want to follow along here. And we're going to start by using SPY here today. So let's first take a look at where you find this indicator and how you add it to your chart. So you want to go to the top here and you want to go to this indicators button. You want to go ahead and click on it here. And then here you can search up any indicator that you want. So we just want to go ahead and type MACD here. And if you take a look here under technicals, you will see the MACD right here, which again stands for moving average convergence divergence. So go ahead and click on this once, and then you can go ahead and close out of this window here. And as you can see, the indicator gets added to our chart here now. So let's first talk about what this indicator does, and then we'll talk about how it works and how it can make you money. So the MACD indicator is a momentum oscillator primarily used to trade trends. Now, even though it is an oscillator, it is not typically used to identify overbought or oversold conditions. So let's first understand what we see here, what all these different lines are, and what this histogram is and what it represents. So firstly, which one is the MACD line? The MACD line is going to be the blue line that you see here, okay? And the orange line is going to be called the signal line. And then we have a histogram here, and notice that we have red bars and then we have green bars. So there's a line that separates these two that is called the zero line, okay? And so remember, you can go into the settings here for this indicator and you can change the defaults. This also will remind you what all these different things are. So for example, you can see MACD line is going to be the blue line, signal line is going to be the orange line, and then you'll see the histogram above. It's going to show you green for grow, for fall it's a lighter green, and then for below grow, kind of a lighter red, fall it's going to be a red. So you can change these defaults as well, but I'm just going to leave everything as it is right now. Okay, so let's go ahead and click OK here. Now let's talk about the histogram and how it works. What are these bars that we see here? So here's how this works. When the MACD line, which again is the blue line that you guys see here, when this crosses the signal line, which is the orange line downwards, you are going to see red bars. So for example, right here, right, this blue line, which is the MACD line, crosses below the signal line, the orange line. And so what do we see in the histogram? We see red bars. Now, on the other hand, when the MACD line crosses the signal line upwards, so right here we have the blue line, the MACD line crossing above the signal line, the orange line, you are going to see green bars. That is how this histogram works here. And so the other thing I want to mention here as well is that how far apart the MACD and the signal line are from each other will determine the length of the bars here. So notice here, right, the MACD line and the signal line, they're pretty far away from each other. And so you get some pretty long bars here. But like over here, where the signal line and the MACD line aren't really that far away from each other, you get smaller bars. So that's another thing to understand here. So now that we have an understanding as to what we're seeing here and how this works, let's talk about how traders use this MACD indicator. So here's kind of the general consensus on how this works. So the MACD line, which again is the blue line here, when the MACD crosses above the zero line, which again, the zero line is right in the middle here, which basically again separates the green bars from the red bars. So when the MACD line crosses above the zero line, it is considered to potentially be bullish. Okay. Similarly, when the MACD line crosses from below to above the signal line, right? So for example, here it's crossing from below to above the signal line here. This is also potentially considered a bullish signal here. Now, on the other hand, right, when you see the MACD crossing below the zero line. So right here, crosses below the zero line. Again, that's generally considered to be bearish. And also when you see the MACD crossing from above to below the signal line, so right here it's crossing from above to below, this is most of the time considered to be bearish, a bearish trade that you could potentially enter there. Now, here's a mistake that a lot of people make. A mistake people make is trying to use just the MACD indicator by itself. What you want to do instead is add another potential indicator here to basically make this strategy even more well defined and give you a better chance of being profitable here if you do enter a trade based on the MACD. And so generally what you can do, and what a lot of people do to make this an even stronger strategy, is they like to go ahead and they like to add a moving average here, usually the 200-day moving average, which will confirm a trend here. Remember, this is used to trade trends, generally speaking. And so we want to make sure that if we're going to enter a trade based on the MACD indicator, that we're not trading against the trend. You always want to trade with the trend here. And so remember, the way you add the moving average here is you go back up here to your indicators, you click on it, and for this one we want to use the EMA. So we're going to go ahead and type in EMA here. So that's going to be the exponential moving average. So go ahead and click once on here. You would go ahead and click out of this window, and then we want to use the 200-day moving average. So for length, we would switch this to 200. So again, this moving average, the reason we use this is because this helps us identify the trend. Remember, if the price is above our line here, our moving average, and our line is pointing upwards, that lets us know that we are in an uptrend, meaning during that period you probably only want to be entering long positions, bullish positions, right? You don't want to trade against the trend. And then on the other hand, when you see the price below the moving average and the moving average is starting to point downwards, that lets us know that we are in a downtrend. So during this period, you probably only want to enter short positions. You don't want to trade against the trend. It's just going to be too risky. So that's why we use this moving average to help us make better trading decisions here along with the MACD. So let me show you two examples here, one bullish example, one bearish example of how you could potentially use this here. So the first one I'm going to use is this one right here. This is going to be using XOM, which is ExxonMobil. This is going to be a bullish example here. So we see, right, so I have my MACD indicator and I have the EMA, which again is going to help us determine the trend here. So we see here by using this EMA, 200-day EMA, that XOM is in an uptrend. How do we know that it's in an uptrend? Because the price is above the 200 EMA and because this EMA line is pointing upwards. This lets us know that XOM is in an uptrend. So now, just because we know that we probably only want to take long positions here. We only want to take bullish positions here. So now we can go ahead and use our MACD indicator and use what I just talked about to potentially enter a bullish trade. So again, remember, if we want to enter a bullish trade here, what we want to look for is where the MACD crosses the signal line upwards, so from below to above, and below the zero line. So we want to make sure that when the MACD line crosses above the signal line, that it's also happening underneath the zero line. And so where do we see that? We see an example right here. We see the MACD line, which is the blue line, crossing above the signal line. So that indicates to us that it's a potential bullish move, and it's also happening below the zero line. So potentially, right when this happened, you could have gone ahead and entered a trade, right? Because as you can see here, we have our, again, MACD going above our signal line, starts to go above. It actually goes above the zero line. Again, another potential bullish indicator there. And then what do we see here? What do we see happen with the actual price? We actually go ahead and plot a line here, right? We see that from here, basically from where it crossed it, what happened to the price after this? It made a huge move to the upside. right? So this was definitely a bullish move that we see here. And again, we confirmed this with two things, right? We confirmed it with following the trend, understanding that the trend here was bullish, and then looking for a bearish setup with the MACD indicator. And again, that would be where the MACD crosses from below to above the signal line and then crosses above the zero line, as you can see here. So this is an example of a bullish position using the MACD indicator along with the 200 EMA. Now let's take a look at a bearish example. So let's go over to a new tab here. For this one, we're going to be using AMD, okay? So here is AMD, and let's take a look here. So we see AMD is currently in a downtrend. Again, how do we know this? Because we have our 200 EMA, and we see that AMD now is trading below this EMA line, 200 EMA, and the 200 EMA is starting to point downwards. So this means AMD is in a downtrend right now. So this lets us know that if we want to use the MACD here, we only want to enter short positions. We don't want to trade against the trend. And so where do we see a potential setup here? So again, the way you want to do this here, when you want to take a bearish position, is you want to wait for the MACD line to cross from above to below the signal line like you see here, and you want this to happen above the zero line, which it does happen here, right? So we have our MACD coming from above to below the signal line, and this happens above the zero line, so it happens right here. So again, let's take a look at what happens here. So once we see this, you could have potentially entered a short position here, right? And it crosses below the zero line. And so what happens to the price of AMD here, right, from when that happened? You can see that it makes a rather large move to the downside after that, right? It's made a pretty big move since then, from 94 to now at 73. Now, of course, you would have probably taken, you would have probably set a price target over here. Your stop loss should probably be somewhere around the 200 EMA. And that's how you generally speaking, a lot of traders use the MACD along with the EMA line here to potentially enter trades. So anyways, guys, if you have any questions about anything I just talked about, feel free to leave them in the comment section below. Check out the Discord, a link to it in the description below. Hope you enjoyed the video. Let me know what you guys think. Now I'll see you guys next time.